Stock market crash 2021. Time to get rich. The chances of a stock market crash in January 2021 are very high. It might seem like the stock market is doing well. Unfortunately, this does not mean that the economy is doing well. The TSX Composite Index fell 38% during the recent stock market crash due to the panic created by COVID-19. The government has made tremendous efforts to provide relief to Canadians affected by the lockdown to ease their financial burden. It looked like we had escaped a massive financial crisis thanks to the Canadian Revenue Agency pumping millions of incentive funds into the economy. However, there is another market crash on the cards due to the enormous economic impact left by the ongoing pandemic. It's time to buy high-quality dividend stocks. Most people hate a stock market crash. Fearing a market crash for obvious reasons is perfectly reasonable, but investors with a long-term horizon can use it as an opportunity to become more affluent. The best way for investors to achieve this is to view a market crash as a chance to buy high-quality dividends for cheap. During a healthy economy where everything is doing well, the valuation of high-quality stocks continues to rise. These income-generating assets increase shareholders' wealth through regular dividend payments and capital gains. However, many investors prefer to stay away from them due to the high valuation. Investors may consider looking up better value in growing stocks that can grow their capital. A stock market crash can bring the valuation of even the best stocks on the TSX to more attainable levels as everyone panics and leaves their positions at companies. This makes the share prices even more devalued, regardless of whether the underlying company is financially sound. The result is the open session for value investors to get a piece of cake at a much lower cost. When the dust settles and the economy improves, value investors making the right investment decisions can become even richer than before. Recovery choice of the market crash. I think Toronto Dominion Bank is an excellent stock to consider for this purpose. The stock fell more than 35% from peak to bottom during the March market crash. TD has recovered 45.47% since the crash and is trading at $71.69 per share. At its current valuation, the stock pays its shareholders an obvious 4.41% dividend yield. Toronto Dominion Bank is a financial institution that has tackled many challenging economic environments. The bank has a wide moat that allows it to survive the crisis without stopping its dividends. The bank has over 150 years of dividend payments that did not break even during the 2008 financial crisis and the two world wars. Despite its reputation, TD suffered like the rest of the stock market in the March selling spree. A similar situation can happen if the market collapses again, causing valuation stupefaction. While I would never recommend trying to schedule the bottom, I suggest releasing some liquidity so you can buy TD stocks if a market crash occurs. You can get a great deal for stock that pays high quality dividends. Foolish takeaway. Value investors use market crashes to earn wealth by playing smart. Buying high quality stocks for a big gain is one of the best ways to achieve long-term wealth growth. If you think a market collapse is imminent, I recommend reallocating your capital to make room for a portfolio of high-quality dividend shares. Investing in the right stock mix at a low price can help you get much richer in the long run. I think TD could be a great addition to such a portfolio. Stock market crash. Are there any warning signs that a stock market bubble will burst? The current stock bubble will likely turn into a stock market crash someday. As a result, indices such as the FTSE 100 and FTSE 250 did not rise permanently. Their history is full of bear markets, regressions, and corrections. Despite this, some UK stocks continue to be traded at low prices. This could mean that they offer long-term growth potential as the economic outlook improves. Therefore, there may be buying opportunities even after the recent stock market rally. The bursting of a stock market bubble, while the prospect of a market crash after a stock bubble may worry some investors, it is unlikely to be a major concern for those with a long-term outlook. As a result, the FTSE 100 experienced multiple falls, including the 1987 crash, the dot-com bubble, and the global financial crisis. Despite all this, its current price increased from 1,000 points in 1984 to 6,500 points. Therefore, investors who can look beyond short-term market declines will generously profit from the stock market growth. Trying to avoid the bursting of a stock market bubble can be problematic. If an investor sells his stocks too soon, he risks missing out on more earnings. However, selling too late means they are unable to prevent a stock market crash. Therefore, the strategy of buying and retaining high-quality companies in the long term seems more logical than trying to time the market. A vague look creates purchase opportunities. Of course, there are signs that the current stock market bubble may burst. It could be caused by risks such as a market crash, Brexit, an uncertain economic outlook, or a number of other factors that cannot be reasonably predicted. While the presence of such threats can naturally entice some investors to sell stocks, they can actually create attractive buying opportunities. Risks could mean that stock valuations are lower than they would otherwise be. This can allow an investor to buy high-quality companies for less than their value. Over time, their valuations could increase significantly due to a possible economic recovery that provides stronger operating conditions for many businesses. So, instead of worrying about a stock bubble bursting, now may be the right time to buy UK stocks. By creating a diverse company portfolio in FTSE 350, it is possible to limit overall risk by reducing company-specific risks. This could allow an investor to take advantage of the stock market's long-term growth prospects. By buying stocks at a discount according to their value, they can outperform a wider index. This can create scope for additional capital gains in the long run. Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.